So hi everybody, this is Hustle Hub. I'm Giacomo and today we're covering Netflix. This is one of the stocks that you asked me. Before we get into the video, make sure to like, subscribe and comment which stocks you want me to analyze next. And if you're interested in the databases that I use for this analysis, the links will be in the description. So make sure to check them out. So let's get into it. Netflix has a platform where we can see movies, series, and so on. It's a streaming platform. It had a very good track record in the last few years, but this year it had a pretty hard time. So it's still hard to forecast whether Netflix will come back and continue to perform like it used to be in the previous years, or it will face difficulties and so on. So let's take a look at what Wall Street thinks about Netflix right now. So we can see 63% of analysts still recommend a buy, 26% a hold, and 10% a sell. So let's take a look how it has done in the last 10-15 years or so. So it has done pretty good, but it has come down in the last year. So let's take a look at the latest reports that came out. They came out from Credit Suisse, Wedbush, Morgan Stanley. So let's take a look. So we can see Goldman Sachs, and then we see Morgan Stanley, and then let's take a look. Here's Credit Suisse, Cohen, and then Wedbush. Alright, we can see that pretty much they have followed the same track record. So we can see that one interesting thing to see is the analyst from Wedbush, who has taken a very bearish position for a lot of years. It hasn't performed very well in the last few years, and then he got right finally in 2022, and now he has become more positive with an outperform that has already been met. So interesting thing to see. We can see the other latest ones. Let's see Credit Suisse, for example. So here's Credit Suisse. Let's see what they have done in the latest years, in the last year, let's say. All right. All right. So this is what they have done in the last year. They went from an outperform, all right, an outperform, and then we've seen a bit of a slowdown. Still an outperform back in January, and then neutral. They have gone neutral, and then still neutral. Okay, still neutral. So these recommendations are less relevant when they start to go down, because analysts, especially in these big investment banks, don't want to take too much of a negative position on these stocks, because a lot of times the same investment banks work along these companies for all the services, investment banking services, so they don't want to take too much of a negative position. Take a look at Morgan Stanley in the last year. So Morgan Stanley pretty much on the same pattern of Credit Suisse, and they went more neutral during this year. Let's see. They still hold an equal weight rating. Let's rank the analysts based on their past performance. So we see who had the best calls. So the most recent one that had a pretty good performance with Netflix is the one from Cohen. So let's take a look at what Cohen has to say about Netflix right now. So Cohen, interesting, they followed pretty much the same path, and then they went outperform. No, they held an outperform rating even though they were going downwards. And now the price is getting closer to the price target, and this guy from Cohen had a pretty good ride with Netflix in the last few years, so that could be an interesting indicator. So the guy from Rosenblatt was neutral, he was more conservative, still neutral. Yeah, he lowered the price target during this year, but he still holds a neutral position, so he's not so positive about Netflix right now. So let's see the guy from Benchmark. So the guy from Benchmark still holds a sell. So hard to say right now. There are many different opinions on Netflix. So we can say for certain that the competition is increasing, so that's not very good for Netflix, that's for sure. So let's take a look at Netflix, some of the fundamentals. So we can see that the market cap 130 billion, income around 5 billion. It has employees, this number of employees, but it looks like it's going to fire more. It has a pretty positive price to earning ratio. Hard to say whether it's justified right now, given all the variables, both in the fixed income market that influence the equity market, and given the hard time, given the fact that it's very hard to predict what Netflix will do in the future and whether it will be able to keep up with the growth that it had in the past. So you can see some of the news. You can see that it's pretty likely that they will continue to fire personnel. So let's head to my spreadsheet to have a better perspective on what Netflix has done in the last few years. So here you have my spreadsheet. We can see the revenue. We can see the revenue growth year by year, and we can see that they have done a pretty amazing job in the last few years, but in the last year also they have slowed down quite a lot. EBITDA also, we can see a lot of growth. That seems okay, but it depends on the ability of Netflix to continue to grow. Otherwise, it will be likely that they will dilute the shares faster and faster. Enterprise value still very positive. Also the market cap, which has grown quite a lot and then came down quite a lot in the last year. So enterprise value to EBITDA, we can see that it has changed quite a lot in the last year. It has been drawn down quite a lot. And then we can see the shares. We can see that there was quite a lot of dilution, but it was totally justified by the growth in the stock price. It will be hard to say whether they will be able to justify this, given the fact that it's likely that Netflix won't have the same growth that it had in the last few years. So earnings per share, quite a lot of growth. So shareholders were pretty happy about it until the last year. It looks like it will be harder for Netflix to keep up with the same growth path. They have increased prices, but it will be harder in the future to retain customers, given the fact that there are a lot of competitors right now, Netflix, and there will be others coming up. So Disney is certainly a good competitor, so we'll have to see whether they can keep up with them. The geographic data is pretty interesting. They make most of the revenue in the United States, but there has been a lot of growth in Europe, Middle East, Africa, and so on as well. And Latin America has been a little bit slower. Also, Asia Pacific has seen a lot of growth in the last years, but the main market still remains the United States and Canada. So this is it for today. Hope you enjoyed this video. If you do, make sure to like, subscribe to the channel, and comment which stocks you want me to analyze next. So this is it for today. I'm Giacomo. This is Hustle Hub. See you next time.